Hi, this is Dan with Invest Rent to Own. Thank you for watching this video. We're going to talk this time about inflation and why it is good for a real estate investor. Why is inflation good? I'm telling you it's good because you should go ahead and buy more real estate, because real estate is hedged against inflation. You actually benefit more as you're holding real estate than the average person would. And I'm going to prove it to you. Why? Your house goes up in value faster. The amount that you own in equity is going to go up faster than the inflation rate. Rents go up faster, and your debt that you end up borrowing is paid off with cheaper dollars. That's ultimately what it comes down to. And I've got a little graph to show it to you. Here is an example. Buy a $100,000 house, put 20% down on it, and get an $80,000 loan. And then up in the upper left here, this is an example of how your investment grows with a 2% inflation. And this 10% is essentially what your equity is doing. The value of the house goes up 2% from 100 to 102 to 104 with a little more, right? As it compounds. But your equity is getting that direct benefit of it. So your 2% inflation is benefiting you at a 10%. If this is a 2% instead of a 2% inflation, the 7% inflation, it's all the more exaggerated. And that's what this graph is on the right side here. These top two are about that. This top orange one is the 7% growth, and the blue one is the 2% equity. These other two are okay, so a counterpoint might be, well, it's really that the value of the dollar is going down by that amount, not that the real estate is worth more. So I did another example. I couldn't show the table at the same time for space, but it's essentially that the debt is shrinking in value and the value is staying the same, but your equity is still growing. And so that's what this is. This is your debt being less valuable, right? Your debt shrinking at the 7% inflation rate, and the gray is at the 2% debt shrinking rate. But either way, you're getting a great benefit above and beyond just holding. Now, this is really an example about the power of leverage and inflation, right? Because if you paid cash for this house, and you would see just the dollar for dollar benefits. So the strategy to use when you're in an inflation market is essentially you want to buy more, because the more that you have, the more that you can get benefit from this. The more that you can borrow, the better you're at, because your borrow, right, that borrowed dollar is worth that much today. You buy the value of the house today, but the value of the loan decreases over time. It's actually the government's overall strategy with regard to the government's debt. So if you think about, right, trillions of dollars of U.S. government debt, they actually have figured out, well, it's more than just figured out, they've got to keep inflation at 2 to 3%. Otherwise, that government debt is going to eat them alive. So if you've heard Ben Bernanke in past years, he was a former federal chairman who was during the time of the 2007 to 2010 crash. He was quoted as saying, how would you avoid deflation? He said that he would just take helicopters and full of cash and just drop it in the streets to make sure that deflation doesn't occur. Because what deflation means is that the value is going the other direction. Things are going down in value. That means that debt is more valuable, right? So that means the price of your debt is increasing, and that would put the government out of business with the amount of money that they owe its other creditors. All right. Back to strategies for higher inflation for real estate. You do have to consider, right, that likely the next shoe to drop kind of thing is that the Fed is going to raise interest rates in order to tamp down inflation. And that's a good thing overall because more people benefit from a lower inflation rate than just real estate investors or high net worth individuals. So it's good to have inflation low, but during these periods where inflation is high, you can take a greater advantage of it. You do have to have a plan for when those rates increase. So, for example, perhaps you should not be buying 3-1 ARMs or adjustable rate mortgages in this particular case because you're going to expect interest rates are going to rise. You're better off with a fixed interest rate at lower interest rates and have that inflation overcome that interest rate. A few years ago, I refinanced my mortgage on a multifamily investment that I have, and the rate on that loan is about 3%. So at a 7% inflation and a 3% loan, the bank is actually losing money on its loan. So you want to be on the other side of the equation. You want to be the real estate investor, borrowing the gobs of money, being a smart financial individual with it, having it cash flow for you, but ultimately it's going to grow and grow and grow in equity. The rents are going to go up. That's inflation. All these things are to the benefit of the investor. Okay. Hope that gave you a different side of the coin. I know that it's been in the news a lot lately. Oh, woe is us. Inflation is so high. I want you to understand that as a real estate investor, it benefits you. And you should take advantage of these kind of situations to grow your portfolio and grow your net worth. Again, this is Dan with Invest Rent to Own. I appreciate if you like this video, give me a thumbs up and subscribe to my channel. Thanks so much, and we'll talk to you again.